Good afternoon, friends. We are back with another very interesting aspect that we are discussing today in view of the pandemic, how the insurance sector, the changes are unveiling and what are the new things that's developing. On one side, the industry is going through a lot of changes, lot of uncertainties, but on the other side, some new opportunities are emerging. And I must say that this is one industry which has actually faced the pandemic very boldly. Hats off to the leaders of the industry. They ensured that customer services went on unblemished. They ensured that their people were there on the ground. They ensured that each and every customer got their claims if it is genuine. Industry also came up with a range of COVID specific product. I would not get into the debate of whether the pricing was right or wrong, but I think the intent of the industry, along with the regulator, was very right. Now, that brings me into the question that what happens to the shareholders? And do we have enough risk mitigation for the insurance companies going ahead? This pandemic is one, but we have two experts. Srinivasan sir from the industry, he is a very well-known name. Now he is a director for National Insurance Academy. And Mr. Yashish Dahiya, who has actually crafted the concept of digital insurance, which has actually become the buzzword for the industry now in view of pandemic. So what do you gentlemen in terms of telling us what should be the role of the regulator? What should be the role of the policy initiator? What should be the role of the management to ensure that while the customer servicing goes up very nicely, while the employee safety is taken care of, how do we ring fence the safety and security for the insurance companies in this current situation? Let me start with Srinivasan sir, your input, and then I'll come to Yashish.
Thank you, Amit. Dear friends, good afternoon to every one of you. First of all, thank ET for giving us this opportunity for being here. Amit, you raised a very important question as to what happens to the insurance companies in the current environment of pandemic and then, post-pandemic. The first few months, the industry was impacted. There was a drop in premiums. There were issues in terms of servicing customers because every insurance company was not really, current as far as technology is concerned. But what we are now seeing is the industry has very quickly adapted itself to the new environment. There's a new normal which the industry has adapted itself to. Today, every company has found some way of leveraging technology to, do business, to service customers, to connect to the customers. The business impact is also going away. The industry is growing. I hope that by the time the financial year is over, the industry would be clearly in a decent positive as far as growth is concerned. But there are some challenges. One is, of course, the COVID claims are increasing, which is having an impact on those companies who are doing, a little bit on health, who are heavily on health portfolio, would face some issues. But it's not a very serious problem at this point of time. We'll have to wait and see how the virus develops. There's an issue as far as investment income is concerned. As we know, the returns, especially on the debt securities, are going down. The equity market has recovered substantially, but I see clearly some impact on the investment income, which could impact the profitability of at least those companies who are dependent on the investment income. So clearly, this is time for the companies to focus on, underwriting profit, so that their dependence on investment income comes down. So on the whole, I personally feel insurance is one of those sectors which is not very seriously impacted by the pandemic, unlike other sectors. But there are people who say that the industry has benefited because the claims ratios in other lines, like property or motor, have been relatively lower as compared to the earlier periods. But I think they are also picking up as we are reaching normalcy. So I don't see a problem as far as the financial owners of insurance companies is concerned. The regulator has been very, very forthright, and they've been very proactive. They had asked all the boards of insurance companies to keep monitoring their financials. Only downside could be that if the economic situation, which we are really looking at a negative GDP growth in the current year, there's a possibility that some of the investments of the insurers could face difficulties if those companies do not do well. I hope and wish that it doesn't really happen. So that's an area where the insurers will have to keep monitoring their investments to make sure that there are no issues. Otherwise, I clearly see a couple of positives. One is the importance of insurance is now understood as never before. I think the insurance industry tried its best. But I think the pandemic has really drilled down to the minds of the people why insurance is very, very important. Second is the importance of technology. Is clearly, the industry is now trying to put its best foot forward as well as using the current modern technologies concerned. These are two very important positives. So I'm really very optimistic as far as the industry is concerned.
Thank you, sir. Coming to Yashish. Yashish, lot of worries on the increasing number of claims. And first quarter, actually, people thought that there'll not be much of COVID in India and will possibly escape because we are a country, we are not that cold, atmosphere is pretty hot. That will take care of the virus and things like that. Or people who would be there affected, they would not be insured. But I think now that every one person out of two or three are having COVID, and COVID claims are sizable. Also, life insurance claims have gone up. Today morning we are discussing about that. So there's definitely worries on adequate capital adequacy on the part of reserving. So what are your thoughts on that? Should this worry be can be negated in some way? Should they prepare for something? Over to you, Yashish.
Sir, I do believe that, on the life insurance side, as an industry, we have focused a little less historically on the risk products than on the, than on the investment products. Our focus is largely on the investment products. And perhaps owing to that, our maturity on the risk side as an industry is perhaps still quite early, I would say. But that said, the claims are still being paid, and the industry is well capitalized. Of course, the regulator is handling that extremely well. On the general insurance side, it's been where the claim frequency is extremely high, and all the companies are well attuned to paying claims. There has been a topsy-turvy ride, if you would. Clearly, in the first 3-4 months, there was a bit of silent, happiness at the fact that claims had gone down quite dramatically, and everybody's loss ratios improved. In fact, as I look at things from our perspective, for the different channels, etc., we track. We saw even channels which were earlier operating at 150% claims ratio come down to 60-70% claims ratio. So everybody was having a bit of a nice time, but clearly that lull in claims has come back to being more like a normal situation. And the COVID claims have started to pick up. Specifically, sir, the problem has not been yet felt in the pure health insurance or in the pure GI policies. However, the problem is felt very severely in what were sold as COVID-only policies. You had a lot of policies where for 600 rupees you said, I will cover you for COVID for 9 months, etc. There, the numbers are looking slightly worrying. If there is a company which does not have scale and has largely gone in for those policies, they could find themselves, maybe having some difficulty, as Sir also pointed out. However, on the whole, the industry is robust, and the industry does not seem to be worried as much, because for the large companies, the COVID claims is a small proportion of their policies. You would appreciate, sir, at 600 rupees, if you've sold COVID claim policies, and now in the metros, as you rightly pointed out, every second, third house is having COVID. And the cost of COVID is a few lakh rupees, and the policy has to cost 50,000 rupees, not 600 rupees. Because it's eventually our own money that comes back to us through insurance. Now, you asked a very important question. What is the long-term solution here for shareholder protection? My belief is getting customers is always hard. And getting quality of business is always hard. So there is a large dependence the industry has on distribution. The industry is largely a distributed industry. The distributors work very much as part of the industry, and they're the front face that interacts with the consumers in bringing the consumer in. Now, with that kind of power, there also has to be responsibility. And I believe we as an industry should work towards mechanisms where distributors are not just paid by volume of business, but also by quality of business. Because it cannot be said that only an insurance company is able to look at the quality of business. The distributor who knows the customer also has a contribution on the quality of business, of course. And not just on quality of business, but also lapsation. An insurance company, and this is more for life insurance, an insurance company alone is not responsible for its lapse rates. The lapse rates are the responsibility of the distributor, because the distributor is the one, if he explains the product well to the consumer, the need for lapsation should be far lower, right? So my view is it's time that the industry moved towards a well-recognized mechanism where the rewards were linked to not just volume, but also quality of business. So it's a percentage of premium, of your lapsation rates, and your claims ratio. Because only then will the distributor and the industry be aligned. And sir, this is specifically important for the smaller companies, because they don't have the ability, they don't have the cross-subsidization ability that I have a large book which is profitable, and thus I can cross-subsidize a certain amount of poor book also. They don't have that ability. And I think it is very important that their shareholders very transparently know what they are paying and what they are. If somebody is bringing you business at 120% claims ratio, and you on top of that are paying them a, let us say, even 10% commission, what are you paying for? And let's assume there's a very high lapsation also then. So I think some of those issues, as the industry matures towards quality of business, we do need to take care of, sir.
Actually, so many things to talk about, and given the time paucity, last 5 minutes, I almost plan to do a rapid fire with both of you. Srinivasan sir, it starts with you. On the reinsurer role, do you think that health insurance, which is not a reinsurance model as of now, should that change? Do you see reinsurance premium going up, going down? Your quick thoughts on that, sir.
On the reinsurance side, I agree that most of the companies do not go for much of reinsurance. But clearly, there's a need for some kind of a stop loss cover for perils like pandemic. I think the industry has to think of some kind of reinsurance protection for health insurance as well. And I think if they do that, then probably the impact of events like COVID will not hit the direct insurers much. But as far as reinsurers is concerned, there are a couple of more points I would like to mention. One is there's a demand for pandemic products like non-damage business interruption cover. This is a big event across the world. Maybe I think with the help of reinsurers, we should provide this product to the customers who seek it. Second point is reinsurers have been hit hard by COVID claims. So the market is hardening and rates are firming up. And what happens is when the reinsurance market hardens, it doesn't soften quickly. So at least for 2-3 years, we are going to see a hardened reinsurance market.
Yashish, coming to you with my rapid fire on new products that you see getting developed, in this market. And very interestingly, I know that there's a job loss product that's getting introduced, and I think Yashish, that's quite a smart move. And do you see any such more products developing because of this pandemic? So, what are the positive sides of the pandemic?
No, I do believe that the job loss product should be there. It has to be limited. It exists in the rest of the world. So if somebody is salaried and for particular reasons of health, at least health or any particular other reason, they have to lose their job, then a certain amount of protection can easily be provided. Of course, in India, the job protection regulation not being so severe, it may be hard to prevent in all cases, but that is an important one. But sir, I think the more important one today, and the one I strongly believe in, today a person is saying, I want to cover myself for 5 lakh rupees of health insurance. What if the claim is 20 lakh rupees? Is the person saying, I'm so rich that the insurance company should only pay 5 lakhs and I will pay 15 lakhs? The insurance company is actually supposed to in ideal situation, you go to the insurer or the reinsurer for high severity, low incidence, which is exactly those events. So my view is it's time that health insurance moved towards unlimited cover, and you could have what a customer can decide is what percentage of the or what amount he will pay upfront. So 50,000 rupees, 1 lakh rupees.
Yeah, more of deductible. Yeah.
Deductible is my choice, but having a choice of I want to be covered for 3 lakhs or 5 lakhs is not a consumer's choice, neither the insurance company's choice. And I think that is where, to your question to Srinivasan sir as well, I think the reinsurers will have a very large role to play there, because it is for those events that you will require the reinsurance cover as well. That is why the life insurance industry is more dependent on the reinsurers than the health insurance industry. So I think that is this inadequacy of cover needs to be addressed one way or the other. And I think that would be a big change that will happen in the market, sir.
Thank you so much for your comments, gentlemen. I would have loved to go on and on. The rest of the speakers are waiting for their panels, and I'm sure that we'll engage with much richer conversation very soon. But I think a lot of good news for the industry, and thanks for giving your inputs on protecting the most important stakeholder part of it, as the shareholder. If the industry has to grow, if the industry has to be there, if the country has to grow, if Mera Bharat Mahan has to happen, industry also has to make money for the shareholders. And you made it clear beautifully. Thanks for joining the conversation, the short and the sweet one. Thank you very much.
Thank you, sir.